Good afternoon, students. Welcome to online classes. Students, today we are going to read chapter 2, that is National Income Accounting or National Income and Related Aggregates from the book Introductory Macroeconomics. Today we are going to cover the following topics, and the topics are here. First, we are going to learn what is meant by economic welfare. Next, methods of calculating national income. Under that, we are going to read income method, expenditure method, and value added method or output method. All these three methods we will read in the following sequence. First, what is the method? What are the steps to be followed in that method? And what are the precautions to be taken while calculating the national income? So students, this part is very important. One should be very careful while learning these methods. Definitely from these methods one question will be asked for you in the board examinations. So students, first our topic is what is meant by economic welfare. So students, what I want to say, before studying what is meant by economic welfare, first of all you should know what is meant by welfare. Then we will read what is meant by economic welfare. Clear? Now, so students, generally economic welfare means, first welfare means, here it is defined in this way. The term welfare means the sense of well-being. The term welfare means the sense of well-being. Now coming to the economic welfare. Economic welfare means the sense of well-being which are affected by the non-economic factors. I repeat, economic welfare means the sense of well-being which are affected by the non-economic factors such as national income, consumption expenditure, etc. National income, consumption expenditure, etc. which can be expressed in monetary terms. Now, well-being of the people is also affected by various non-economic factors. I mean, well-being also affected by some of the non-economic factors such as pollution, liberty means here freedom, etc. The economic welfare is indicated always by per capita real GDP. The economic welfare is always indicated by per capita real GDP. Now, based on this one, students, there is one question. The question is like this. It may be asked in their examination. Write down the limitations of using GDP as an index. Gross domestic product as an index of welfare of a country. I repeat, write down the limitations of using GDP as an index of welfare of a country. For this question, the answer is like this. GDP figures give no indications of the population, skill and resource of a country. I repeat, GDP figures give no indications of the population, their skills and resource of a country. A country may be having high GDP, but it may be consumed by the increasing population. So that the level of people's welfare, standard of living remains low. High GDP may be due to greater area of the country. Or due to the concentration of some resources in out particular country. GDP does not consider the level of prices of the country. It does not, consider the level of prices in the country. People may be having income, but people may be having income, but may not be able to enjoy a high standard of living due to high prices. Now, high GDP may be due to the large contribution made by a few industrialists. Level of unemployment is not taken into account. GDP does not care to reduce ecological degradation also. Due to the excess of economic activity which leads to ecological degradation, which reduces the welfare of the people. Hence, GDP and economic welfare are not positively related. They are negatively related or inversely related. Income in GDP does not bring about increase in the economic welfare. So this is the topic about welfare or GDP and welfare. Now coming to our main topic of today, that is how to calculate national income. How to calculate national income. So students, here generally there are three important methods of calculating national income. First of all, you should know what is national income. The total income of the country during a year or during an accounting year, or the total incomes of all the people in a country in an accounting year, or the total value of all the final goods and services in the country is also called national income. Unpaid factor cost is called national income. So these are the differences of national income. Now I am telling there are three methods are there. So income method, expenditure method, and value added or product method. So these three methods are there, and with the help of these three methods we are going to calculate the national income of the country, of any country, during that accounting year. Now students, I'll explain each in a theoretical manner, and in the next video we will do the practical works by doing some numerical questions based on this methods. So first, today in this video I am going to explain all the three methods, their steps and their precautions. Okay students, now so there are three methods for the measurement of national income, namely that is value added method, or also called production method or product method. Second is income method, and the third is expenditure method. So these are the three methods, that is sure. Now under all these methods, the first common step is the measurement of national income of the country or of a country is to classify its producing enterprises into three categories. I repeat, the first common step to be taken while calculating the national income of a country is we have to classify the producing enterprises into three categories. One is primary sector, second secondary sector, and the third is tertiary sector. We have to classify into three sectors. Now you all know, you have studied in the previous classes, what is primary sector and what are the activities that are carried out in this sector. So students, listen once again. Primary sector includes all units which produce goods and services by exploiting the natural resources. I repeat once again. Primary sector includes all such activities which produces goods and services by exploiting the natural resources. In this sector, the following activities are there: agriculture, fishing, mining, forest and logging, quarrying, mining, etc. Now the second is what? Secondary sector. So secondary sector includes all those units which produce commodities by transforming one type of commodity into another type of commodity. I repeat once again. Industrial sector includes all those units which produce commodities by transforming one type of commodity into another type of commodity. And in this manufacturing sector or secondary sector, what are the activities are carried out? That is, one is manufacturing itself, construction activities, electricity, gas, water supply, etc. Okay, now third one, tertiary sector. This is the third sector, also called service sector, and again it's further divided into quinary and quaternary sectors. Now, tertiary sector includes all those units which produce services like education, medical facilities, transportation, banking, communication, computers, general administration, and various several other services. So these are the three sectors, and the activities which are carried out already you come to know. Now students, listen. First we will go for, that is, here it is given income method. So first income method. So what is income method? And with the help of this method, how we are going to calculate the national income of a country during an accounting year? Very simple. Income method means by adding the incomes of all the individuals in the country, which includes primary sector, secondary sector, and tertiary sector. So in the primary sector, how many people are engaged and what are their total incomes? In secondary sector, how many people are engaged and what are their incomes? In tertiary sector, how many people are engaged and what are their incomes? So all the incomes, the total incomes of all the people in all the three sectors of a country during an accounting year, if you add them, then you will get this national income. So this is income method. See, income method is that method which measures national income from the side of payments. Income method is that method which measures national income from the side of payments made in the form of wages. Payments are made in the form of wages, rent, interest, and profits to the factors of production for their productive services in an accounting year. I repeat once again. Income method is that method which measures national income from the side of payments made. Here payments are made in the form of wages, rent, interest, and profits to all the factors of production for rendering their productive services in an accounting year. Increased by the net factory income from abroad also. In this method, national income is measured at the stage when factor incomes are paid out. When the factor incomes are paid out to the factors of production, in that stage we are measuring the national income. Okay, so I repeat once again, in this method, national income is measured at the stage when factor incomes are paid out by the producing enterprises to the factors of production. Now, what are the main steps that are involved that comes under while calculating the national income? The first step, classify the producing enterprises into three sectors that I told you already: primary, secondary, and tertiary sectors. The second step is like this: estimate the following factor income. Estimate the following factor income paid out by the production units. Estimate the factor income paid out by the production units. Under this, there are three subtopics are there. Number one, compensation of employees. Here you should come to know what is meant by compensation of employees. Here compensation of employees is nothing but the wages or the salaries, the incomes which are received by the people, that is called employees is called compensation. So compensation of employees, which includes wages and salaries plus other goods and services provided by the employer. Here employer means a person who keeps some labor under his control. For example, if I am working in some factory, so I am the employee, and the person under whom I am working, or the person who appointed me for that particular job or service, that is called employer. So compensation of employees includes salaries and wages plus goods and services and other services provided by the employer to the particular employee. Okay, such as medical expenses, transportation, rent-free house, okay, car, etc. Okay, next one. Second is what? Rent and royalty. Rent and royalty, comma, interest and profits also should be added in this one. Rent and royalty. A royalty is one of the reward given to technology. Okay, so rent and royalty, interest and profits also added. Now third one, mixed income of the self-employed. Already we have studied in the previous video. That is mixed income. Incomes of doctors, engineers, lawyers. This income which we cannot classify into factor income and other incomes. Okay, mixed incomes. Now step 3. Take the sum of the factor income. You take the sum of all the factor incomes by all the industrial by all the three sectors to arrive at the net domestic at factor cost, NDP at factor cost. I repeat, take the sum of the factor income by all the sectors, that is primary, secondary, tertiary, in order to get the net domestic product at factor cost, NDP at factor cost, which is called domestic income. Okay, now add the net factor income from abroad to the net domestic product. I mean, already we got the net domestic product. In this net domestic product, we have to add the income, the net factor income received from abroad. Net factor income received from abroad also we need to add in the net domestic product at what? That factor cost. Okay. So add the net factor income from abroad to the net domestic product at factor cost to arrive the net national product at factor cost, that is NNP at factor cost. NNP at factor cost itself is called what? National income. Okay. Now what are the precautions? What are the precautions to be taken while calculating the national income through this income method? First one, avoid transfer payments. We should not include the transfer payments such as here grants, gifts, okay, scholarships. Okay, so avoid transfer payments because they are unproductive. They are unproductive in nature. I mean, without rendering any productive service, we are getting this income. So this income will not be included in the national income. So avoid transfer payments while calculating the national income through income method, which includes what? That is gifts, donations, charities, scholarships, okay, age-old pensions, all these things. Now, second one, avoid capital gain. Avoid capital gain, which is the income from the sale of second-hand goods and financial assets. I mean, whatever income you are getting by selling the second-hand goods, or we can say that selling the financial assets of the country, so that income we will not include in the income method while calculating the national income. Third one, include imputed value of income from self-consumed output. I repeat, include imputed value of income from self-consumed output. For example, when a house owner lives in his own house, he does not pay rent for that one, isn't it? When a person is having own house and in the same house he is living, for which he is not paying the rent. Okay, now not paying the rent, clear, but in fact he pays rent to himself, so this rent must be counted as a factor payment, so it can be added in that one. Clear, students? Now coming to our next is what? Expenditure method. So what is expenditure method? Listen, students, expenditure, very simple. I mean, in a country how much money is spent by all the people belonging to all the three sectors, primary, secondary, tertiary, on their consumption or final goods. So if you add that incomes, that will become total expenditure. In this way we can calculate the national income. So listen, students, so expenditure method means here C plus I method. Expenditure method is also called C plus I method. So what is C plus I method? Let us see. So expenditure method is also called C plus I method. It is that method which measures the final expenditure. I mean, what is the final expenditure on gross domestic product at market price during an accounting year. I repeat, expenditure method is called C plus I method. It is that method which measures the final expenditure on gross domestic product at market price during an accounting year. This total final expenditure is equal to the gross domestic product, okay, at market price. In this method, national income is measured at the expenditure phase, that means spending phase, second phase. Okay, now what are the main steps that are included in this expenditure method? The following are the steps that are included in the expenditure method while calculating the national income. First step, classify the economic units incurring final expenditure into different groups like household, government and firms. I repeat once again, classify the economic units incurring final expenditure into different groups like household, government and firms. Second step, estimate the following expenditure on final products by all economic units. Estimate the following expenditure on final products by all economic units. In this, again, there are four subdivisions are there. First one, private consumption expenditure, PFCE, private final consumption expenditure, PFCE. It should be included. Now, government final consumption expenditure, GFCE, government final consumption expenditure. Third one, gross domestic capital formation, gross domestic capital formation, GDCF. Now, fourth one, net exports. How will you get net exports? What are exports? When we are selling goods from one country to other country, they are called exports. And when we are purchasing goods from other country to our country, that's called imports. So how will you get net exports? Very simple. I mean exports minus imports. Exports minus imports will get the net exports. Here in economics, exports is represented with the capital X and imports are represented by capital M. So net exports is equal to exports minus imports. This we have to add. Now, third step, deduct depreciation. I mean D. You know depreciation, already you studied all the losses that are occurred during the year in production process. So deduct depreciation or consumption of fixed capital and net indirect taxes. Net indirect taxes, NIT. Net indirect taxes, NIT. From the gross domestic product. That means from the total gross domestic product, we have to deduct all these things. I mean minus D, minus NIT and consumption of fixed capital. Here, like I said, depreciation or consumption of fixed capital or net indirect taxes. This you have to deduct from the net domestic product. Oh, to arrive what? The actual figure. Now fourth step, add net factory income from the abroad. Net factory income, whatever you receive from abroad, that we have to add here. That is NFIA, net factory income from abroad. Net factor income from abroad, NFIA. Okay, to the where we have to add to the net domestic product at factor cost, that is NDP at factor cost. To obtain the net product of at factor cost, that is NNP at factor cost, which is called what? National income. Now precautions. What are the precautions to be taken while calculating this national income through expenditure method? First one, avoid double counting of expenditure. So double counting of expenditure should be avoided here. Okay, by not including expenditure on intermediate products. So whatever expenditure we are making on intermediate products, that will not be included in this method, expenditure method. Here intermediate product expenditure means what? I mean only the expenditure. Intermediate expenditure means what? I'll tell you. Now, only the expenditure on final products should be included. I mean, intermediate expenditure should be not be added, whereas the final products expenditure should be added in this expenditure method. Now, second important precaution. Expenditure on gifts, donations, taxes, scholarships is not expenditure on final products. So, this should not be added. Expenditure on gifts, donations, taxes, scholarship, etc. is not expenditure on final products. These are expenditure on transfer payments and should not be included in the final expenditure. Next one. Next precaution. Expenditure on purchase of second-hand goods. So whatever expenditure you are making on second-hand goods also should not be included in this expenditure method. Okay. However, the broker. Okay, the broker expenditure which is made during this one, his whatever money spent on the brokerage, that should be added. I mean, but any brokerage, okay, charge should be included. Now next, expenditure on financial assets like shares, bonds, debentures, etc. should not be included. So whatever income is received through this one or whatever expenditure made on this one, that will not be added in this expenditure method. Now, estimated value of self-used goods or own produced final products should be included. I repeat, this should be included. Estimated value of used goods or own produced final goods should be included. For example, I told a house owner using the house for himself. The imputed value of the owner, okay, occupied house must be included in NI, means what? National income. Now coming back the value method or output method. So what is value added method, output method? Listen students, last one, very very important. Value added method, already told, that's called production method or product method. Okay, it is that method which measures the national income by estimating the value added at factor cost by each producing units in the domestic territory of the country. I repeat, value added method is also called product method or production method. Okay, it is that method, okay, in which or which measures the national income by estimating the value added at factor cost by each producing units in the domestic territory of the country in an accounting year, increased by the net factor incomes from abroad. So this also, net factor income should be added here. In this method, national income is measured at the production stage. In this method, the national income is calculated at production stage. Now, what are the main steps? The following are the main steps to be followed or adopted while calculating national income during production method. Now, classify the producing enterprises. Classify the producing enterprises into three categories. That is, I told you, primary, secondary, tertiary. Now, second one, estimate the net value at factor cost. Estimate the net value at factor cost, that is NVAFC. Net value added at factor cost, NVAFC, by each producing enterprise by taking the following sub-steps. Now, what are the sub-steps? There are three sub-steps are there. Number one, estimate the value of output by adding sales and change in stock. That is called closing stock and opening stock. I repeat, estimate the value of output by adding the sales and change in the stock. Second one, estimate the value of intermediate consumption. Okay, that means cost of raw materials. I told you, intermediate consumption is what? Yes, intermediate consumption is what? The cost on raw materials. And deduct the same from the value of output to arrive the gross value added at a market price, GVA at factor, GVA at MP, market price. Next one, deduct depreciation. Again, here also we have to deduct depreciation. In a value added method also we have to minus D. So deduct depreciation and net indirect taxes, minus D and minus NIT, okay, from the gross value added at market price to obtain the net value added at factor cost. Now, take the next step, take the sum of net value added at factor cost by all producing enterprises to arrive at a net domestic product at factor cost, that is NDP at factor cost, NDP at factor cost. Next one, last step, that is add the net factor income from abroad to the net domestic product at a factor cost, that means NDP at factor cost, to obtain a net national product at factor cost, that is NNP at factor cost, which is called national income. Now, what are the precautions to be taken in this method? Again, avoid the double counting of production. Avoid the double counting of production. Instead of taking the value of output, take only the value added by each production unit. Second one, the output which is produced for self-consumption and whose value can be estimated must be included. The sale of second-hand goods should not be included in the current production. Next one, the value of intermediate consumption is not included. The value of intermediate consumption is not included to avoid the problem of double counting. So these are the steps and precautions to be taken while calculating the national income by these three methods. So in the next video we will discuss the practical, how practically we will solve the problems. So there will be some numerical problems, how to solve that one, that we will discuss. Thank you students, have a nice day.